Okay, so today we're going to do the statement of cash flows for Oracle Limited. All right, so the first thing you're going to do for your statement of cash flows is the operations activity. Now, guys, remember for the accounting 103 test one, we don't have to do the operations activity. However, we do need to do our SaaS income T account. Um, but we might need this for the exam, and given that we're going to go through the entire statement of cash flows in part 1, part 2, and part 3, and maybe so on. Okay, so the first thing we're going to do, so the first part of your operations activity is broken down into 4 parts. All right, the method that we will be using is the NID method. N for net profit before tax, I for interest income, I for interest expense, and D for depreciation. It's pretty simple. All I did was just broke it down into abbreviations, so it's easy for you to remember. Okay, so the first step is always to read thoroughly through this through the income statement to check all of the information. Okay, so the first thing, NID, N, net profit before tax. So if we look here, you'll see below here it says profit before tax 386. And just a quick note, it's profit generated through operations before changes in working capital. So you can decide whether you want to include that or not, but either way it's okay because you're still mentioning it here for our total. All right, so it says here profit before tax is 386, and from our additional information it does tell you here that all amounts are in millions. Okay, but you may write them as they are. Okay, but we're going to write them as they are supposed to be. So the first amount is 386 million. Then the second thing we're looking for is our interest income. All right, so you'll find it right here, 34 million. Now, just a quick note, the first part of operations, for some reason it's opposite. So whatever is supposed to be subtracted, we add those figures, and whatever is supposed to be added, we actually subtract. We do the opposite and we subtract it. So here for our interest income, even though we're receiving this money, we're going to put brackets and we're going to subtract that amount. So and then here for interest expense, it says it's 46 million, but here we won't put brackets because, as I said, it's for some reason it's opposite. Then we're going to calculate depreciation. In order to calculate depreciation, we need to check our assets, specifically our non-current assets. And so we find here under our PPE, land and buildings from 2010 to 2011 has remained the same, but there is a change in plant and machinery. All right. Now, before we do include these amounts, always remember to check your additional information. So it says here that the company spent an additional 190 million on plant and machinery. Okay, so we're going to have to use that amount when calculating depreciation. So the first thing is you'll take a higher amount, which is the year from 2011, and we're going to subtract 618 million plus 190 million. All right, so we can do that working out right here. We can type it out, 650 minus open brackets 618 plus 190 million. All right, and you can type that out in your calculator, and you can see what it gives you. It should give you 158 million. Okay, and also guys, make sure you mark this in your workings. If you do not show workings, you will lose a mark, right? So W1, and you can put it next to there, W1, right? Awesome. And then finally, and you'll notice I didn't put the brackets even though it's depreciation, because as I mentioned over and over, it's the opposite. Whatever we are supposed to subtract, we add, and whatever we are supposed to add, we are subtracting. Lastly, add up all of these values and it should give you 556 million.